So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. What would you do if you saw this as a potential investment and were thinking about whether it would go up or down? Today I want to talk about contrarian investing and the top 3 ways that it is screwing you over and you need to overcome it as a limiting belief, especially for long-term investing if you ever want to have massive success with your compounding portfolio, okay? Now here's the deal. Its position goes up and 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 up. Then at this point, my question to you is, what do you think is going to happen next? If you think this thing's going to go down, why do you think it's going to go down? You're going against the trend. You're going against the consensus. You're going against what every single person in the market says. That's stupid, right? If it only goes up, it's pretty freaking likely that it's going to keep going up. It would take a pretty serious event here to make it stop going up. So let it go up, right? I see this happen so many times where positions, their stocks, they're going up and 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 up. And for no reason whatsoever, somebody says, oh, I think this is going to come down. No reason. You know, you've got supporting moving averages. Everything's going. Economy's booming. And yet people see these investments that just go up and they say, wow, this has to come down. I'm going to short it. So they short it. And then it goes up and up and up and up and up and up and up. And then it takes 5 years for them to get to the same point again. You don't want to do that. You don't want that to happen. So the number one thing is you can't, especially with longer term investments and trends, bet against the trend. The trend will continue. Trend is king. Most people are usually wrong. Secret number 2, right? The majority is usually wrong. And the minority is usually right. But I'll tell you guys a little bit of a secret, right? Like, the majority control how the stock moves. Stocks, how do they move, right? Supply, demand. How many people are buying, how many people are selling. If a majority of people think it's going to go up and they keep on buying it, then that means that it will keep going up, right? And so you have to understand, especially with swing trades in long-term investments, that you've got to go with what the public's saying here, because it's all a perception game. It's all about what people think the stock should be priced at, not necessarily what it's actually worth, right? You can go and read all about this company as much as you want, but if the market says it's worth more, then it's going to go up and up and up and up. That's why when you see investments that are only going up, great example is Visa, MasterCard, AYX, okay? These are companies that are in this exact same growth pattern. Energy companies are in this growth pattern. You look at Southern, up, 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 up. And people are shorting them. All they do is go up. It's a gradual curve. You want to get in on the action. I've been in Visa for 6 months, 7 months. They've done nothing but go up. They're up 40%. They're killing it. But you think it would have made sense for me to go right here and say, wow, Visa's expensive? If everyone thinks they're going to go up and they keep making bank, then they're going to go up. All right, so that's number 2. You have to understand majority versus minority. The minority is usually right. The majority is usually wrong. That's why in active trading, 90-day trading, you crush it by going against the majority. But for swing trading and long-term investing, you have to understand the position of the majority and stick with that as you factor it into your trades and you understand what you're doing, right? Great example of this, and then we'll get into secret number 3. I can use this amazing. Okay, so you look at Newell Brands. Newell Brands, absolutely freaking huge company. They used to own Johnston's. They just sold them. They own like Elmer's and probably about 40 other consumer brands. I don't know if I can do them justice. They're huge. They're absolutely huge. They're a massive company, okay? You look at them in 2008, they had a massive crash. You look at them in 2018, they had a massive crash, okay? They've just been dead. It's huge. It's insane. You look at the charts and basically, they were down here and then they went up and up and up and up and up and up and then they went down, 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 up and up and up and up, down, 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 down. They're right here, okay? What did I decide to do? I decided, look, oh, it's so low, everyone's selling, I better get in. What do you think happens? I'm going against the trend, betting on a reversal on a swing trade on a long-term pick, not based on a very solid technical indicator. Now, you can do this, right? You can bet on reversals, but it needs to be based on a sound technical analysis. And that's not what happened here whatsoever. I get in here, and then it just goes down and down and down and down. This is $20, right? Now it's at $15. Now I'm looking at call options because I got to recoup, this shit. This happened right here. It keeps going down. Why? Because the majority of people think it's going to go down. I don't have to agree with them. I don't have to know why. Some people sent out a news report when it was up here and sent the thing plummeting. And it's just going to keep going and going and going. Why is it going to keep going? It's going to keep going because people think it's going to keep going, right? There's just nothing you can do. You got to shift your mindset and understand the positioning of the majority so that you can get in that same idea, same ideology, same positioning. That's the power and the principle of understanding what most people are thinking, okay? Now, number 3 is a little bit more related to indices and also relates to sort of your active trading style, right? It's this idea that if you keep crushing it over and over and over because you have the right education and you know the things to do, you know exactly how to have the impact you desire in the marketplace. Well, what's that mean? It means, first of all, that you're going to have a very, very huge leg up over most investors, right? But the important thing to look at here is that compounding long-term growth curve. So when we look very, very specifically at your portfolio as a whole, right? Not just one stock, 2 stocks, 1 position, 3 position. I'm thinking more about your overarching growth, okay? What happens is you get into this little pattern, and it's something that Ray talks about in Principles. Absolutely stellar book. I'm going to link the review below because it has so much application in financial markets. You're going to go up and up and up and up. But as you're going up, what happens? Well, you have these little downtrends. You have these little downtrends. You have these little downtrends. And sometimes these downtrends, these can be freaking big downtrends. Maybe instead of just going down a little bit, you were up super big, and then you're down super big, and now you're coming back here. Like, there are going to be ups and downs, right? And this is especially true if you're only investing in index funds, which is why you definitely want to focus more so, especially with long-term investing, on if you're worried about this volatility, is low correlation asset allocation. And this is something I talk about so much more in chapter 35, but it's this idea that what you're doing needs to be in different assets, especially when you're approaching retirement age. For me, young guys, it doesn't really matter. You can just invest in indices. Right now is probably not a great time to invest in indices. If you saw that video on the inverted yield curve, you kind of understand that like indices are about to get ganked. But if you're looking at like a 40, 50-year outlook, indices, they consistently go up and up and up and up. But you don't want to retire as an indice starts to crash like this, right? Like you don't want this to be your retirement age. So as you get closer and closer to it, 20 years, 15 years, 10 years, you want to look more at low correlation asset allocation. What's that mean? It means picking assets that don't rely on one another. So for instance, very, very, very popular American investment, 60% stocks, 40% bonds. That is crap. Bonds are related to stocks very closely. If one goes down, the other goes down. That's not what you want. If this happens, you don't want to keep going down. People in '08, they got ganked because they had 60-40 allocations. Market goes down 50%, bonds go down 40%, 20%, 10%. You think that's good for them? Does that work for them? No, it doesn't work for them. What would make sense? Something in gold, something in treasury, something in corporates outside of the Americas. International. This is all based on low correlation asset allocation. You want to have different correlated things. So maybe gold is inversely related to the market. Maybe a different country is inversely related to the market. You want these different assets to go up while others go down, so you have consistent growth at a slightly lower level, but with significantly limited downside. Amazing, amazing book. Tony Robbins, Money Master of the Game, talks about Ray Dalio's all-weather fund. I talk about the all-weather fund in chapter 35. This fund portfolio, this allocation, went down 4% at the most in a century. Went down 4%. That was in '08. That was in '08. And if you understand the principles behind it, all of a sudden, you turn this downtrend here into massive growth. So please, please, please. Third thing, as a contrarian investor, you don't want to look at a downtrend as a reason to sell, because a vast majority of the time, even if you have bad allocation, you can still succeed. You can still do fine. You just got to sit your butt in it and let it gank. This is specifically with overarching indices. With individual positions, it's a little bit different. With individual positions, you want to make sure that you're setting your risk tolerance at the level it needs to be at. So if a stock is going down and down and down and down and down, you've got to have a point in a short-term trade where you're like, look, I've looked at this historically and it just went up a bunch. Now it's going down. Where's my price level where this is a historic support resistance level, right? So this comes down more to technical analysis. And as soon as you master that resistance, you're going to have tremendous, tremendous, tremendous growth, because you're able to pick out the exact position where the stock goes bad, the exact point where you need to change your mindset, change your mentality, and get your butt in it or out of it. Maybe for here, you're trying to get in it for an ABCD setup. What's that? Well, there was an overarching upward movement that enabled this A, B, C, D, massive growth. What is this? It's not contrarian investing. It's investing with the majority. It goes up and up and up and up and up, and then it crushes it. Why does it crush it? Say we have the VWAP, okay? VWAP, very, very simple, just a line you'll use for 9-to-noon trading, okay? The VWAP's right here. It bounces off the VWAP, okay? Most people think it's going up, so you support it. You go with their opinions, and you go up and up and up. Same thing happens if this actually broke through the VWAP and started to go down. The majority of people think this is not worth as much, and it's going down. Support them. I was on a trade yesterday. I traded the stock. It went up 8%. I made 8% on the upside on the A. And then I was waiting for it to turn into an ABCD setup. It just didn't happen. It broke through the VWAP right here. You short it at the VWAP crossover or a little bit afterwards on the negative side, so you're being safe. You're looking at a 20% upside on that trade. It was insane. It was probably in yesterday's stock video. It was crazy. So amazing. Why? Because you're working with the majority, not the minority. Once you can understand that, and once you can systematically use that to leverage your growth, you're going to crush it, okay? This is the fundamental principle behind long-term growth in standard U.S. equities markets. It's because everybody is in the same mentality that the S&P should return 9% a year, the Dow should return 12% a year, the NASDAQ should return 14% a year. These are psychological imprints on individuals' minds, and because of that, the majority of growth is up and up and up in financial markets. That's the power. That's why it doesn't pay off to be a contrarian investor. You short the S&P every single year instead of investing in it for the long term. In 20 years, you're going to be in the water, dude. You're going to be ganked. In the short term, you might crush it, but you're going against the credo. And you've got to make sure that when you go against the majority, you have a very, 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 very good reason to do it. Amazing movie. Highly recommend. The Big Short talks about how these guys shorted the housing market in '08, made tons of bank because they went against the majority. How did they do it? They had inside information. They knew what the heck was going on. If you know what the heck's going on, you've got an advantage. You can go against the majority. The majority of people are stupid, okay? But please, 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 if you are in a standard investment situation, the majority is massively important, and they are generally correct. So look at this in your positions, look at this in your investments, look at it in your portfolio, and understand exactly what you need to be doing. I'm taking a lot more short positions in the past 6 to 12 months. I've been crushing it with those because the market has been a little bit more bullish, especially after the inverted yield curve, or bearish, okay? So go with the trend and understand the trend changes, the trend adapts. And you need to look at it on a macro scale to understand your individual trades, your individual investments, so you can go out there and absolutely crush it. Does that make sense? Does that sound awesome? Hope you guys got a ton of value from this. Go out there, crush it, and I'll see you guys in the next video. Thanks so much. Subscribe, bell, whatever, comment. Let me know. Were you a contrarian investor before you watch this video? I'd love to freaking know. A lot of people, a lot of stuff to do. Go out there, guys. I'll see you later. Thank you. Bye. Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.